Okay, recording this video on Saturday, the 1st of October 2016, and I hope you had a great day's trading on Friday. In fact, I hope you had a great week's trading because we had pretty darn good range all week. This is my handy dandy little range indicator where I go back 99 days and divide those days into three buckets: the low range, the medium range, and the high range days. And these are the breakpoints that you get on those. And you can see the last 4 days were high range days, and then the Monday of this week was a medium range day. And that's pretty good. Friday we had 17 3/4 points top to bottom during the day section, which is pretty excellent. And it really contrasts, what we've been doing since September with what was happening in July and August. All these yellow bars, look at that, those are all low range days, and that was hard work. But this week has been great, so I do hope you've enjoyed it as much as I have. So I want to show you 5 things about Friday's trade that were kind of classic, really nice principles, I suppose, on the charts and setups for great kind of long trades. So let's start off. The first one of those is always say, when you're looking for exhaustion patterns, the market will not reverse until you have exhaustion during the full liquidity of the day. By that I mean during the day session. If we have an exhaustion pattern pre-open, that's not good enough. We usually need everybody to be involved, get everybody at their desk. The markets, all the participants haven't participated unless the market is fully open. So if you get an exhaustion pattern pre-open, don't ignore it, but just question it. Just wait for an exhaustion pattern kind of after the open. That'll be a high probability for the setup for a reversal. So here we go. 500 tip bar chart on the multiple time frame system view of the indicators. This is the open of the day, and there are the little exhaustion patterns that we got. We got this really strong move after some weakness in the overnight session. European markets kind of sold off, and then we got some data releases, a whole bunch of stuff kind of happening here, and we kind of sped away into the uptrend. You can look at all this was a monster reading. This was a really big reading on exhaustion, but it happened pre-open, and the ones kind of before then, they were getting the move going. These guys were buying, sorting this thing out, and whenever we came back into that kind of area where they had been happy to buy the breakout of that channel, they stepped in at those points. This exhaustion buy happens pre-open. That is not good enough. There's the bearish signal after that volume pattern where we have weakness, but that's not enough to reverse a market. We have to have exhaustion during the full liquidity of the day. So the open, this is 11 a.m. There's the exhaustion patterns that we get kind of later on that led to some pretty severe kind of profit taking at the end of the day. So there we go. That principle number 1 is not enough to reverse a market. Wait for at least that during the day. Number 2, Rambo patterns. So here we go, this kind of blow-off move, and it certainly felt like a blow-off move as it kind of opened up. We got our bearish divergence, and then we really start to rocket to the downside, and there you go. What do you know? A Rambo pattern. Poor old amateurs getting short. This thing, all of a sudden, their moving averages have started to roll over, and they're like, well, we're going for a down day. No. So Rambo patterns kind of going here. They get wrong-footed. That's the wrong place to go short. They don't get out here. They get there's a little bit of strength kind of bounced off there, and then they think it's kind of going their way. It breaks a little bit lower about 20 minutes later or so, and then they're like happy, pigs in clover. Their trade's going to work out? No. It reverses quickly the other way, and they get taken out. Rambo pattern. That's a Rambo to Rambo channel. So they've got their stops just sitting above this kind of recent little pivot high. Bang, as soon as their stops get hit, poor old amateurs get taken out again. So that's a Rambo pattern too early. What should you be waiting for? You're not going to get into this move here. This is kind of, you don't know what's going to happen basically here. This thing's kind of taking off like a rocket. Yeah, there's an easy 4 points in there, but I was waiting for professional bars to come in. Wait for the professionals to kind of step in, and let me just blow this up a little bit so you can see where the professionals kind of actually stepped in. There's the open of the day. We got this breakaway move. It comes down. The amateurs way too early. All this amateur activity. Amateurs getting short here, and then they're kind of playing the other side of the channel. More amateur bars here. Professionals, here's where they step in. Blue professional down bars, they're buying this little retracement. Wait till the highs of a blue professional bar gets taken out, and that's around here. Bang. And they're pretty anxious at that point. That's an amateur up bar, professional up bar, so they're like absorbing all of the volume in there. Yep, let's take that. and they kind of race it up kind of there. A little bit of a testing with an amateur down bar there. Later on, they have not taken profits up here. Look at these, all these up bars into these highs. No blue professional up bars taking profits with resting sell orders or kind of anxious to get out of a move under this the shadow of this kind of peak here. They are not taking profits here. They actually jam it down at this point here, and then they step in again. Almost exactly the same pattern as this one here. Pick it up a little bit on the downside here, and then jam it up, kind of getting this thing going again. So I'm just going to move this on a little bit for you, and then we just raced away as soon as we kind of looked like we were going to take out this high. Wait for those blue professional bars. You'll be able to see on the 1500 tip bar chart. Let me show you the 1500. This is the activity and a little bit of detail. So there's the open, they jammed it up, Rambo patterns. There's the first blue professional bar on 1500 that comes in. And it wasn't a down bar. They kind of absorbed all that volume, they bought it, and they raced away. We broke the highs of the blue professional bar. So that was the first activity. It's just dangerous to be kind of wondering what is going on here. If you've entered here, this thing's kind of backwards and forwards, and then all of a sudden it's gone through the lows of this. You're like, what's going on? Just wait. Professionals will show the way. They'll tell you what they're doing. You need to follow along kind of what they're doing, and just waiting for that professional bar. So that's number 3. The next thing is, where do you put your targets for kind of getting out of this move? And what I'm trying to do with my more kind of systematic approach to trading these days is, what I'm trying to play is the exhaustion sells to the exhaustion buys. So I'm still 4 points is still a good kind of target. If you can get in and out with 4 points with a little kind of fuss as possible, it's that's a good trade. I'm not kind of negating that principle. But I'm more looking for these exhaustion patterns to kind of adjust my target and move them out. If you're onto a winner here, once it kind of broke up above this recent high, this thing just took off to the upside. So look for exhaustion patterns to get out. I like getting out on the way up. I don't like sitting through the little pullbacks and then testing up to a pullback to end of trend. Yeah, you could get out definitely at the end of trend, and that would have been a really nice kind of profit take at 63 or so kind of up here. I was getting out of this move. I was long 52.50 out at 61 for 8.5. So that for me was a really good trade. So I was entering here on these blue professional bars, kind of coming in, and then as soon as this exhaustion pattern was kind of setting up, I was getting out there at 61, whatever that level was. Yep, just there, just after that on that little push up. So blue professional bars kind of coming in there, exhaustion patterns and so on. So that's a good place to kind of take profits. Yeah, it ran kind of all the way, but for me that's kind of a nice trade, not having to sit through any of this kind of garbage on the way to kind of really pushing the target out. And the last thing I want to show you is the rippling through of the time frames for the end of trend signals. So we've broken into an uptrend at this point here, and you can see the rippling through of the time frames. Pull back to end of trend. First of all, on the lowest time frame, that's why the little support and resistance lines are really weak, kind of looking here. That's the pattern there. It shows up as a gray dot on kind of this system indicator kind of down below. That means an early end of trend, so wait for the intermediate time frame, at least the intermediate time frame, to kind of go off, and there's pullback to end of trend on the intermediate time frame. So, and then it's rippling through the time frames. Left shoulder, first pullback to end of trend on the lowest time frame. The head of this move, or it's kind of the middle of the kind of topping out move, is an intermediate kind of end of trend signal. There's that, and then it rolls to pullback to end of trend on the highest time frame, and that's this really solid white dot here. Sometimes that pullback to end of trend ends up going off underneath this level, in which case that's a classic kind of left shoulder, head, right shoulder kind of going on, and that's a topping out move. But for me, this is still the same thing. This is left shoulder, head, right shoulder. Sometimes this plots above the head, sometimes it's below the head, but for me that's a topping out move. And there we go, we've had our exhaustion buy. All we're doing is playing out with price, and you can see all the blue professional bars active at the highs here, and there's an exhaustion sell. People really anxious to take profits up there quickly. Very small range, and they just dumped it right there. We have a nasty little sell-off into the open the last half hour, and that's because it's the end of the week. They want to close out their positions. Been a nice little trade all the way long during the day. So there we go, 1, 2, 3, 4, 5 kind of useful principles for that chart. I'll tag on my day trade. It was a nice one. Last thing I want to talk about is bonds. I'm going to show you my 3 bond charts. Now, talking about short signals, change of trends in the bond from uptrend to downtrend has been an utterly futile exercise for the last 30 years. But Friday, all the bond charts, or Thursday, Friday, all the bond charts signaled a low risk entry point after an exhaustion buy, which is interesting. So this is the 5-step setup, which starts off with, let me show you first of all the 10-year. Exhaustion buy, bearish divergence comes in. That's number 1 part of the setup. So that shows that we've exhausted ourselves with volume. Number 2 is we need to kind of play out the clock in terms of pullback to end of trends on all these time frames, and we've had that with pullback to end of trend on the highest time frame. There it is. And we've also gone a pullback to end of trend, a second cyclical turn after there, just with some more strength, and we can't get through. We're finding it difficult to get through that really important resistance level. You know, if the resistance levels like here, we must mess around with it and we break through it, you know, the market's strong. It's going to keep on going to pull back to end of trend on that time frame. Now we've come up to another resistance level. We poked through it, but we kind of lost it. We can't really get through it for the time being. So that's number 2. Number 3, first sign of weakness and a change in trend. There we go. Vertical white dotted line shows us that weakness as we're busting through supports on the way down. Number 4 is low risk entry point. There it is, just gone off. So that's the first cyclical turn after we start to break into this trend. Bang, just kind of printed here on Thursday on the 10-year chart. I think it was Friday on the 30-year and so on. So that's kind of cropped up. The confirmation will be a break of 2 time frames. So either breaking back down below support on the intermediate time frame, or when we get the next kind of support on the lowest time frame. Some kind of other break after that. And it's just interesting that that's kind of cropped up with Friday's trade. We're also sitting underneath this really big ranging blue professional bar. And I always talk about these blue ranging bars, say, look, just wait, and we'll play around the highs and lows, the highs and lows. Eventually we're going to break out of that. But on that day, the professionals were really active. As soon as we get the break of that, the break of the low of that blue professional bar would signal something really quite nasty in terms of the bond market selling off and rates kind of going up. If you look at it on the 30-year chart, the 30-year has been the strongest, then next is the 10-year, the weakest has been the 5-year. So I'll just show you the 30-year, because with the 30-year we busted up through this another resistance kind of here. So at some point we'll probably have to play out pullback to end of trend. But it's the same kind of deal. Exhaustion by bearish divergence comes in. Then we get, you know, our pullback to end of trend on an intermediate time frame, not the highest time frame yet. We get breaks into a downtrend and then a low risk entry point. So that's printed there. And then on the 5-year, same deal. So exhaustion by bearish divergence. We can't get through our resistance, which is a pullback to end of trend on the highest time frame. So you can see pullback, end of trend on the highest time frame, and break into a potential downtrend. Low risk entry point kind of pops up. So any kind of sell-off in the bond market, kind of below this 120 level on the 5-year. 10-year will be below 130, and then on the 30-year below 164 or so, something like that. Will be telling. That'll be really interesting. But as I said, calling changes in trend in the bond market for the last 30 years has been a futile exercise. But we've had low risk entry points pop up on all 3 time frames. In terms of rates, you can put on your better sine wave onto all of these rate charts and just kind of go through and have a look and see what's going on. So this is the monthly chart of 5-year, kind of down here. We're at 1.1%. You know, in 2012 we kind of bottomed out at whatever that was. What was that level? Low 50 basis points would that have been? Is that right? I think so, yeah. So then we kind of found a cyclical support that's been holding for, you know, several months, kind of back here. That's kind of interesting. On the 10-year, again, it's a double bottom kind of being made here around that important kind of level. We pushed down into it and down into it, down into it this time. It's kind of looking like a double bottom. And then this is the sorry, that was the 30-year. This is the 10-year double bottoming kind of here. And these patterns have taken a long time to kind of generate and kind of test and so on. So who knows where we're going with this on bonds, but just wanted to highlight that we had a bond market kind of signal going to go off. Anyway, there we go. Probably wooded on for far too long. Hope you're enjoying your weekend, and let's trade well next week. Okay, just got long 52.50, long 52.50. Got my target sitting at 56.50 at the moment, but this high is 58.50, so that's kind of appealing up there. So we had a sell-off during the overnight session, kind of driven by bad news out of Europe, and then monster rally. This thing just took off, bang. Whole bunch of blue professional bars into the open, bang, with exhaustion buys kind of going on. And although we've had pullback to under trend kind of go off on the intermediate, I think we're going to go have a little bit of a test. That exhaustion was pre-open, although it was a big reading after the open. Bearish divergence came in close to zero line, so we often go flush. I don't think we're just going to roll around. We're going to go test those highs. And we're still in an uptrend on the 500 tip bar chart. What I was waiting for is blue professional bar on 1500. The last we got was taking profits off here. This is where they were just getting in, and I'm going to have to adjust my stop now. They were just kind of getting in on that little breakaway move. Then we had a testing move, amateur down bar there, and now we'll go up to have a look at the highs, I think. So yeah, not in a hurry now because we printed a Rambo. It'll take a little time to get through that, but yeah, we're still in an uptrend, and we've got to work ourselves out of our pullback to under trend on the highest time frame before this all kind of rolls over, I think. Alright, well there we go. That was a little blue professional down bar. They were buying that dip. We immediately break the highs, which is great. That's what I like to see. I've moved my target out to 59.50 because this number is 58.50. A nice little stop run would easily take us through 59.50, and that'd be a good trade. So yeah, we're playing this out, support to resistance on the 1500. Maybe this is going to play in as well on the 45, with the support being a pullback to end of trend that we're doing. So see where we go next. Well, they just jammed it down there. This activity here, just after we had bearish divergence come in here, led by the Amateur's Rambo pattern, signal weakness on the system. And then it's just going to run away to the downside. We're going to come back up and make like a low risk entry point, and kind of, just because of this, go have a look at the highs, test up. But that was a shame. We were just doing nicely. I thought we would just go for a nice kind of run to a blow off move, and something else happens instead. Anyway, so still holding. Well, it jammed it back down again, but blue professional bars kind of stepped in at 1500, breaking the highs of those. So presumably they were kind of picking it up. It's kind of led by the amateurs here. Maybe they're just being taken out on kind of stops or whatever. Still got some time support resistance to run. Pull back to end of trend on the 4500. It has signaled as an end of trend here on the multiple time frame system, but that is some weakness there. That's getting there. So 6,000 reading to give us our kind of blow off type activity. So hopefully all this is just some weakness to trick our friends into shorting, and in fact we kind of go for the blow off move. But it's not a kind of straight shot, so it's just that'll be a low risk entry point at some point, kind of crop up there. Well, another jam it down moment after a bunch of blue professional bars, one on 1500. They just jam it down, support holds. A lot of people starting to think, oh, it's rolling, but we need to see end of trends. We need to see something up here, and a blow off type move. This was kind of pre-open. That was a long time ago. Everybody knows that 58.5 numbers sitting there. It was interesting. We kind of got to 56.5, which was this previous high here, and that's where we kind of got to here. There's a little kind of minor double top type thing, but got to see end of trends. I know we got one here, but yeah, I think we need to blow off this activity properly. Yeah, blue professional bar on that kind of whole sequence. kind of down. Anyway, still holding. Alright, well hopefully this is going to be the little layup for a break to get this exhaustion pattern. Momentum wise, we're just around the zero line, not doing much of anything. We've got to go see a decent reading, an 8,000 or something type reading. We've got pullback end of trends that have gone off a while ago, but we've got strength that's going to kind of pop here. I moved my target to 60. You know, this is 58.5, 59.5. I don't know. It's a good, decent kind of volatile day. But what I should be waiting for is an 8,000 type reading. It's okay. Rambo pattern's kind of leading the way there. Whatever. That's what I'm looking for. 1500, something decent, something like an 8,000 reading. That's where I should be taking profits and letting it kind of run and just see where that happens. So come on. Alright, we're staring down 58.5, this high, and we're just under it, 57.75. We've got a 5,000 reading on better momentum. On this one, nothing special. And more Rambo patterns, that's fine. But no pullback end of trends. We've broken above resistance on the 500, so we've got to go pullback end of trend. So when we touch it, it should get kind of interesting. Sometimes we just have a little bit of weakness after we touch the number, and then we kind of come back into it and then really run them proper. So come on. Right, here we go. We got ourselves a stop run. Just jumped to 58.5, 59. We've got a 7,000 reading on better momentum. I moved my target out to 61. Heck, you know, it's a 7,000 read. We've got no blue professional up bars yet. We still got to go pull back end of trend. Ooh, there we go, blue professional bar, decent read. Yep, still got to go pull back end of trend. No blue professional up bar yet. So come on, let's keep it running. So yep, no blue professional up bars yet. So we hit 60. And it's a 10,000 read. That's pretty decent. So let's just leave me at 61. See if I get it. Blue professional up buy, exhaustion buy. Okay, there we go. So could be lucky with a little bit of continuation carry on. Bingo! Just check it out. 61 for 8.5. Excellent. And it's just gone 61.75. It's got to go pull back end of trend on the 500 tip bar chart, so there's a little bit more in it, but that I'm very, very happy with. So it's kind of going blow off. There's our exhaustion, pattern 62s, and more blue professional up bars here on the 4500 tip bar chart, but there we go, kind of going exponential. Wow, big readings. So yeah, it's still got to go pull back end of trend on the 500 tip bar chart, but good. It was a while in that, and it was kind of bumpy and jumpy, but I'm quite happy.